So we've established that the accountant will have a ton of data at their fingertips within their AIS, or accounting information system. Well, how do we begin to sort through this data and key into the data that will have the best impact on our organization? So we'll start out by just looking at what are some attributes of useful information. So to be useful, information must be, and this is a management requirement, it's got to be relevant. Information that is capable of making a difference in a decision. So predictive value, this helps with forecasting in the future. Is this data going to help us predict what our sales are going to be in the upcoming quarter? Feedback value corrects or confirms what had to be predicted in the past. Okay, so we made a prediction. Did that prediction end up being true, or were we really far off base? And if we were, well, why was that? And then timeliness. You know, if management can't get their hands on the data in time to have an impact on a decision, then it's not really that valuable to them. Okay? Reliable. Now, this is where the accountant really does come into play and is heavily relied upon. Information that is free from bias and error. Verifiable. You know, can it be confirmed by an independent party? That, you know, that always really puts a lot of weight behind our numbers. Representational faithfulness reports what actually happened. You know, the accountants, they're naturally very skeptical of information and are often looked upon to produce the reliable information versus allowing maybe each department head to pull their own data. And representational faithfulness, you know, is a factor that kind of does, you know, put it more in the accountant's realm of responsibility. And neutrality, information is not biased. Again, that could be why a lot of times the accountant is the go-to person to pull the information. Okay, accountant strengths are unique and different and allow you know, the information to come across in the correct manner versus maybe employees within sales or marketing. Their skills and unique contributions are more in a creative way, focused on selling. Their details aren't always going to lie with the numbers, where the accountant is always going to, like I said, be skeptical of that information and look at it to make sure that it makes sense. So let's look more closely at data. You know, how do we just define this term data? Well, it's just simply the raw facts that describe an event and have little meaning on their own. You know, information is defined as being data organized in a meaningful way so that it can be used and serve as an input. Okay? For example, the slide gives us the sale price of a particular toy might be considered data. However, after subtracting the cost of goods sold from the sale price to compute the net profit would be considered more information if it helps a retailer decide whether to carry that particular toy in its inventory. You know, information overload can really be a roadblock, and it can be difficult to sort through all the available data fields to target the ones that are meaningful to the information that you're trying to provide. But, you know, it is a necessary exercise that will provide value to your firm. So again, computers can process and organize and store tons and tons of data. You know, and that too much information, you know, it does kind of hinder your decision making. And thinking back to my experience with databases, there could be 10 different data fields that may have been carrying the specific piece of data that I was looking for. And it was definitely a process to pull each data field up and eliminate the ones that were not producing the data I was looking for. It can be painstaking at first, but as you become comfortable with your own company's database, you begin to uniquely understand your system. So let's just pull it all together. You know, first we'll define a business need or event. You know, from that we're going to go look at our collection of data, and from there, we're going to pull out the information, that is critical to what we're trying to figure out. The ultimate decision is referred to, through the knowledge we applied to the information that we have gathered. And this is what we call the information value chain. And we can see how one need really drives the process along. So now let's take a look at discretionary versus mandatory information. Discretionary information is information that is not required by law. Though not required by law, it can really be that information which allows your business to step ahead of the rest. Starbucks tracking its drink with the highest profit margin would definitely be discretionary, but it could be, a huge campaign that makes a big profit difference in their business. Also, analyzing data to come up with better inventory numbers and less overcosts. These are all examples of discretionary information that could really make an impact on the company's profits. So now taking a look more at mandatory information, this is information that is required by law. Good examples here is your 10K, your annual report, your tax returns. Though not the most fun data to provide, mandatory information is just as important to keep your business in good standing. And this data is usually, in some cases, considered maybe a lower priority to management, as it doesn't help them with those key decisions they're making every day, but it is a high priority to accountants that are aware of the inflexible government deadlines and resulting hefty penalties. Being able to timely report both the discretionary and the mandatory information is a skill that you as an accountant are going to have to actively manage throughout your career, and it can be challenging at times. Well, this sums up the qualities of useful information, so thanks for joining me.